Devesh Kumar, Managing Director and Head Equities at RBS as well, joins in on the show with his take on the fundamentals of the market. Devesh, are you surprised by the rally that we've seen up until now this year, and does it seem like this could actually sustain and hold on around the 5350, 5400 mark?
Yeah, market likes to give surprise because typically market moves in anticipation, and there was a feeling that post our parliament session in December, where there were a lot of disappointments, market will look for some signs of or some confirmation of trend reversal. But I think what was expected is this result season was going to be one of the bad ones, and so whatever good or bad, that all were factored in. And purely on flows improving to emerging markets, not only India but in the region, a lot of other markets, they also rallied and we also participated. And so yeah, the extent of rally was a surprise. But what we feel is going forward, I think it will take a pause for some time, and I think some more headline numbers on that, some comfort will be sought, and in budget session of Parliament, the trends there, that also the market will like to observe before moving into next zone. But in the mid to long term, we are positive, and we feel that second half of this year will be better than first half, and we feel that probably year end will be at a Sensex level of 19,500 to 20,000. That's where we see the market end. And in the interim, if it runs ahead of reality, then it will take a pause, and again it will continue on the path of recovery. We feel that all macroeconomic numbers such as inflation, interest rate, on that there is a consensus, and gradually we will find that they become more favorable for equity investors and also for leveraged corporates, and therefore I think time has come where one starts looking at this changing scenario and does one's reallocation of portfolio at this point of time.
Right. Devesh, don't you think the market is discounting what's happening in Europe? Because while macro fundamentals are improving and there seems to be a trigger for a rally, but there isn't much that's changed in Europe. A Greece default still looks imminent. Huge question mark on Portugal as well. Some of those developments will obviously change dynamics here in India as well.
Yeah, certainly the developments in Europe will impact the liquidity flow that has taken place for a short period, and so there could be some adjustment for that, and that's where I was saying that I think the surprise part is over now. There will be a response to a couple of news flow which is in the offing, but when you look at this full year, and then impact of Eurozone or Greece, all that will get factored in, and Indian story will look better, and I think we'll be headed toward 19,500. I mean, in my view, if the domestic governance part and macroeconomic numbers such as interest rate, they are favorable, then Indian corporates have a strong domestic demand, and so any impact of Eurozone disturbances, that may be countered. But so far we have seen that our internal story itself was not building up properly, and once it builds up, I think liquidity will flow in.
Devesh, a quick call on the IT stocks. Do you think the market is not getting the news flow here right? Because while the market had, was bullish on the IT pack in general because of the rupee movement, now that that's reversed, we don't see a reversal in the stock prices. Do you think that's something that the market needs to look at?
I think as far as IT part is concerned, there it's a mixed bag where there are different strategies yielding different results, and as a sector as a whole, I think it will continue to perform in line with the market, but it will because they are depending on US order book and different markets. Numbers will not be exciting as they were in the past, or it will not behave in a different way from other sectors. So I feel that the currency part is played out now, and then we will not expect any big positive surprises here. But earnings momentum will continue in the coming period.